Hello, this is Olivier. Well, things are unusually calm in the market, so I thought I would do a video on something that might interest you. What if I told you that you may never have to take a losing trade again, or in any case, a big losing trade? Let me let you in on some things that fund managers do. And I was one of them. I worked for Investment Trust in New York, well, their Paris chapter. And I worked for various banks managing private client money towards the end of my career. My signal is creating a lot of controversy. And let me explain something. I have a large drawdown. Now, a large drawdown doesn't mean you've lost money. It means your equity's gone down a lot, okay? A relative drawdown is more important. My relative drawdown is about 12%. That means from the high to the top, probably a €200 loss. I've put in about 1,000 plus in that signal, and there's $3,000 in cash there, okay? Now, first of all, let me dispel a couple of myths, okay? Now, when you start, I don't know, somehow in MT4, everybody thinks that you're supposed to plonk, $3,000 in a signal and then leave it for 10 years, and whatever happens there is your performance. Okay? If you want to do that, that's fine. But I think that's a terrible misconception, because I've given this allegory a few times. If you go to Fidelity in New York, which is a very good fund, and you walk into your Fidelity representative, who has been well trained, like I was, has probably a Series 7, which is not an easy exam to take, to advise people how to invest their money, to be careful, to know your client, etc., etc. And that person walks in and says, I like your fund, it's up 20%, and I want to put $10,000 in your equity fund right now. If he's a salesman, he wants his commission right now, he might do that. But he's probably not going to do that because he works for a very good firm, and he's going to say, well, yeah, Fidelity's up 20%, you've got $10,000, I suggest you put $2,000 in the fund right now. And, when there's a drawdown, as drawdowns inevitably happen, the people who have this idea that you're going to stay in a bot with a 2% drawdown for the rest of your life, I think are having a bit of a delusion, and they're going to put €300 in there and just become rich. Yeah. Well, welcome to the world of Forex. That's not going to happen. I'm sorry. Very sorry to disappoint you. It's just not going to happen. So this man from Fidelity says, okay, why don't you put $2,000 or $3,000 now in the fund, and if we get a drawdown, I'll give you a call. So Fidelity one day goes down, something happens, Fed day, whatever, the guy gives him a call, says, from your money market fund where you've left your other $8,000 where you've been earning interest, why don't you put another $2,000 in the fund, and so on and so on. So mathematically, for the ones who've done a little bit of math, you'll figure out that even if Fidelity goes up 25-30%, you'll probably outperform Fidelity, because you'll be putting in your money over time, right, at a much lower average cost than the total performance of the fund. So you will get a better performance, okay? Because you'll always be buying in dips. Ever heard this expression? Let's buy dips. So let me tell you something about another myth or another investment strategy that you might use, okay? Let's say, like in my case, one good thing about currencies is that when you own, unlike stocks, okay, if you own a stock, you own voting rights to the company, you can get dividends, all sorts of things, and you can keep it forever, whatever. If you short a stock, right, what do you own? You own nothing. you better hope that the stock goes down because your dividend is going to be deducted, okay? And if the stock doesn't go down, you're in a very, very serious situation because, you know, things can go up to infinity, but they can only go down to zero. So mathematically, shorting a stock is a very dangerous proposition. This is not the case in currencies, okay? That's what's great about currencies. When you buy the euro, okay, against the dollar, you're betting that you're actually buying Europe, basically. You're saying Europe's going to be there in 1,000 years, and Europe might outperform the US, okay? If you short the euro, you're saying the US is a better country, they're going to get better data. In both cases, you own something solid. You own the economy of America, or you own the economy of Europe, right? So if you're short euro, or if you're long euro, and you're doing CFDs like me, CFDs don't expire. Well, they expire 1 year later, okay? But the way I trade, you know, they're practically never going to expire because I change in and out of them. But let's say I kept it for a year, okay? After a year, that they'd have to sell me out, etc., etc. But you don't know how lucky you are to have this instrument, because before we used to do futures that expired every 3 months. Options have time value, so as you get closer to expiration, they lose value. Not CFDs. You know, you owning euro and you're owning dollar, basically, if you buy euro. So let's say on my signals, this is what's happening right now. Let's say I bought some euro, and I'm positive on euro. I still am, because I'm from Europe, and Europe is France and Germany, and UK, and some other countries. Well, I would include Italy and Spain, but they're much smaller. France has huge industry, tourism. 5 million people come a year to Paris, brings us a lot of money. A lot of people come to my resort town here in Deauville. We sell arms, we sell weapons. We're one of the biggest suppliers of weapons in the world. We build boats. We're a very powerful nation. You know, despite what anybody says, we complain a lot and all that, blah blah blah. But we're a powerful nation. We're a force. We're a bigger force than Russia per inhabitant. We're richer. So, Germany, France are Europe. UK is probably a little bit bigger than France, although that can be argued. But, it's part of Europe, but not really part of Europe, etc. Italy's a wonderful country, but doesn't have the same growth as we have. And Spain, has had high growth, but so this is Europe. So when you buy the euro, this is what you're owning. You're not owning Greece or whatever that grows. I'm sorry if I'm saying something derogative to Greek people that grows olives every 4 years or whatever. Greece is a very nice country, but it's not a world power. Okay. So that being said, so when you own your euro, you own something. I own the euro right now. I have a large position in euro, and Europe's not going to go away. So why should I be in a hurry to get myself stopped out or lose money on it or whatever? I don't need to lose money. Okay, what I need to do is hedge if I'm going in the wrong direction, which is what I do constantly. Okay, let's say I bought the euro here. Okay. It was nice. I'm still holding the euro here because I think it's going to continue. Renko tells me to sell, and I should have listened to it a bit more, but I hedge basically. So I take a short position against my long position. Okay, that's why I don't have to take a loss. That's why my margin stays high. That's why my relative drawdown is small. Okay, I'm going to hedge, and I'm going to stay hedged and come in and out, 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 until I feel comfortable that I can unwind that hedge. Now that's a tricky thing to do, and you have to be an expert, and you have to be there in front of your computer all day to do it. But this is my main position in my signal, which is causing a huge drawdown. And there's another thing I can do. You know, I've put less than $2,000 in that signal, cash. Do you think I can't go and put 1,000 in right now or tomorrow or when I feel like it? Of course. I've got a 36% growth. It's my money. I don't have anybody subscribing, okay? The only reason I have that signal is to make money and also to show you what my scalper can do. So you can see all the little trades and, you know, the trolls can come as often as they want. But, you know, just look at all the little trades. You know, if you think I'm sitting there doing 0.01 up and down, up and down, up and down all day, 24 hours a day, I think, you know, that guy who's saying I'm ill is right. That's not what I'm doing. But I do take strategic positions in there. I can't help it. That's the way I am. I like to take risk. I believe that if you don't take risk, you have no life. You can't look at yourself in the mirror. I like to take risk, but I take calculated risk. And as I've said, okay, you buy here, you hedge here, you undo your hedge, okay. You know, you could go long here, undo the hedge slowly, so you don't get margined out. All you need to watch is your margin. My margin is 1,000%. Okay, you over leverage yourself. Like everybody who bought my EA in the beginning was making 27-30%, and they didn't understand how leverage works, and they over leverage themselves, and they're still going about it. They're committing insurance fraud. They're doing whatever they want to do, saying that my EA was terrible, but basically what they did was over leverage themselves and didn't watch their margin. So they let their margin go down 200% or something, and then kaboom, you know, you get taken out with a stop. And they didn't understand the power of Renko. I had a Renko module in there that could have been turned on. Everybody turned it off, etc., etc. So what I'm saying to you, you don't have to take a loss. You know, it's difficult to understand for some people, but you can hedge at strategic points. You can buy here, hedge here, okay? Undo your hedge here. It's going wrong. Hedge again, okay? Until you find a correct point where you might not need a hedge. But, you know, what I learned working in banks, etc., is that when you have a short somewhere, you need a long somewhere. When you have a long somewhere, you need a short somewhere in another account. So I hope this kind of explains the strategy here, and maybe somebody wants to contact me and talk to me about this, but you don't have to take losses. You don't have to have large stops. You don't have to if you're trading euro, if you're trading GDP. Now, if you go and trade Swissy, New Zealand dollar, you know, some exotic pair, good luck. It doesn't work there. The spread's too high. Too thin. But I'm talking about euro. I mean, euro, governments can't move euro, you know. The Swiss government tried it, and look, you know, it's too powerful. It's huge. It's a huge market. It's not manipulated. It's pure. It creates nice patterns. It's a beautiful thing to trade. And of course, this strategy I wouldn't use with many other instruments. Maybe GDP, never with the Japanese yen, never with anything else. So I hope this explains something, and you never have to take a loss. You really don't have to take a loss in this modern world with CFDs, okay? Thank you very much.